Good evening to all of you. Welcome you to today's webinar. Today we are going to look at a simple strategy like last 2 days back where I explained a very simple intraday strategy using higher highs, higher lows, then then the 30 minutes and 1 hour time frame, how we can use it in Nifty and Bank Nifty. Similarly, we are going to look at a bigger time frame and also shorter time frame, and we will show that in illustration in Nifty, Bank Nifty, stocks as well as in commodities. So generally speaking, there is no very easy to identify the trend. The sense a 3-month, 3-week and 3-day strategy. That's what they call it. Now, when they say 3 months, if a 3 months low is cut, then it is bearish. If a 3-month high is taken off, it is bullish. So this is a very easy way of identifying a trend instead of looking at any other type of patterns or moving averages. Generally, we can go for this. Okay, so a 3-month low, if it is cut, we can call it as a downward trend, and if a 3-month high is cut, then we can call it as a upward trend. So first we'll look at the monthly trend, we'll go to the weekly, daily, and also we will look at the intraday time frames also. So let's look at the big time frame in Nifty. So Nifty, if you see now, it's a 3-month. See, last 1, 2, 3, 4, 5, 6, 7, 8. Now we are in the 8th month of downward trend. If you see, once this low was cut, which is the 16,782. Once 16,782 is cut, then you can see that most of the time it has not been able to take a 3 months high. Just 1, 2, 3. Again, it has fallen. So now, if it has to become bullish on a monthly chart, it has to now take off this high of 18,114 straight away. So now this is a clear example of looking at a 3-month time frame, and with this we know very clearly that on a monthly time frame it is in a downward trend. Now let's look at the Bank Nifty. Of course, when this is there, I think Bank Nifty will be the same 3 months. See, once the upward trend started after the pandemic. So where did the upward trend start? See, this was 1, 2 and 3rd month. Okay, so once this high was cut in Bank Nifty, that was 22,479. After that, there was no looking back at all. There was no 3 months low cut except at this place. Okay, so once this is cut, we know very clearly that we are in a downward trend. So here also, if you see, subsequently lower highs are being made, and again last month low has been taken off. So clearly 38,765 is the new high, and unless 38,765 is broken on a bigger time frame, we can say that it is in a downward trend. So very clearly, Nifty and Bank Nifty on a monthly basis, going by 3-month high, 3-month low structure, we can identify this is in a bearish mode. Okay, so Nifty is in a bearish mode, Bank Nifty is in a bearish mode clearly. Now we can use also the but less effective will be the 3-week high and 3-week low. So as you go down the time frame, there is a chance that probably you can have some sort of slippages that can take place, or a minor cut can happen, and after that there can be a bounce back. So let's look at the 3-week high, 3-week low. So then we have a 3-week high, 3-week low. Okay, then we will see 3-day high low cut. Okay, and normally in a very sideways motion, when you're going for a shorter time frame, there is a good chance that probably we may see the market probably as some what we'll say that cutting off a high or low and then reversing. That's possible in a slightly lower time frame, but we are talking about higher time frame. Normally that doesn't happen that frequently. So let's look at the 3-week, 3-day, and then we'll go even to a hour and 30 minutes bar chart. See that in some of the stocks and charts, in stock charts as well as in Nifty index as well as in commodities. So particularly this works very well in trending markets. Now let's look at this in a 3-week time frame in a Bank Nifty. So here if you look at it in a 3 weeks time frame, see this low has been cut. So the medium trend, we can say it is down. Now Every time you see when the market here after it made a high, uh, you can see the 3 week low cut. Then after that there was a reversal when a 3 week high was cut. Then again there was a reversal when a 3 week low is cut here, right? Then again there was a reversal like this. So there was some sort of whipsaws here, but despite that we have not lost anything. So here right now we are in the 3 week low which has been cut here, which means that this is going to be a very important high, which is what the monthly high which you are saying. So any pullback we are looking at will have its own resistance. So keeping this high as the top, you can go for a short. So any rally that will take place that takes place in Bank Nifty is a sell as long as 38,765 is not crossed. As long as that is not crossed, and right now we can say that probably the stop loss that is being put here will be 1, 2, and 3rd week. This is the stop loss. This is trading stop loss. So we went short here, keeping this high as a stop loss. Okay, right now we have moved the trailing stop loss to this. So let's look at the Nifty chart. I think we are not getting the chart. So please, there was some, it got stuck. So trading view charts. Not getting this. Okay, so I think okay. Unfortunately, I think we are not getting the charts here. So just please bear with me. Okay. So now this is the monthly chart. So we will look at the weekly chart as far as Nifty is concerned. So Nifty now, the clear breakout of this 3 week low, which happened at 17,003, means that no, this is the top. This is the top. So now we can be short here, keeping this high as a stop loss. That is the 17,414. 17,414. So you may remember last, I think a week or 10 days back, we said now the 17,410 or 414 is likely to be a very important top. And we could see probably a drop which could be around 16,404 even before May 20th. And that has happened quite soon now. So we may expect, no, probably this is the 1, 2, 3, and next week, somewhere around the next week, we may see some sort of a bottom out, because I think so at least a temporary pullback. A temporary pullback of around 600 points can take place. So we right now the fall has come down to this place. So we may expect some more fall that can take place. Some more fall can take place. This is an important support. But if there is going to be a further fall, then it could probably head towards this is a weekly low, which is 16,245. So there can be a minor penetration below that. So it could go right up to even 15,960 or 15,970 levels, but bounce back. So we talked about 16,300 or so is a normal range. Plus but 20% extra is likely to happen. That is of the entire range, which is another 250 to 300 points. So probably somewhere around 16,000, 15,970 to 16,000 is a possibility. So just wait for the 15,970, 980 levels, from where there could be a bounce back. So from there, if there is a bounce back, we could expect something like a 600 to 700 points bounce back. Normally, now we have seen this correction also being of 600 points, so we could expect some sort of a 600 points correction, definitely. Only if there is a correction which is more than 5.5%, which we said about 1,000 points or so, then we could see a bigger rise. So right now, we should be looking towards low, which could be 15,950 to 16,000. Then rise could be probably taken care of. 16,600 to 700 could be a very important resistance. So it has to break much higher than that in order to ensure that the rally further moves towards the 17,000, 17,100 levels, which is a 1,000-point rally from the bottom. But anyway, we are now looking at this particular low, which is 16,824, is a very important low right now, and expect that particular low to hold. So now we look at the as we are talking about this, we look at the daily chart also in this case. A 3-day low. We said very clearly that as you go down the time frame, normally you will have a much greater difficulty as far as the whipsaws are concerned. So you can see the 3-day high being broken here, which means the overall picture was still down because it was in a weekly chart downward trend, monthly chart on a downward trend. In that particular case, you can at the maximum put a stop loss. You can maximum put a stop loss for any of your short position, but you don't need to go long because the bigger time frames, which is the monthly chart and weekly chart, are still showing on the negative side, or still showing on the negative side. So in this particular case, we could have probably look towards removing any of our short position for a re-entry at a later point. So now the re-entry would have come 1, 2, 3 here. The re-entry would have come. And probably again, we would have been removed at this place. But again, we would have gone short somewhere here. So some sort of a whipsaws would have been there in a shorter time frame. So it is up to us to decide whether which short time frame we want to use. Because if you use a daily time frame, then in that case probably the losses can be little more. So it is better to go down to an hourly chart or slightly even much lower, 30 minutes chart or so. Don't go for 15 minute chart at all. Go for a 30 minutes or 1 hour chart for a 3 hour time frame or 30 minutes time frame if you are trading on a lower time frame. So now, but one thing is that since it has crossed below this 3-day low, so 1, 2, 3 days low has been cut, we know that this is going to be a very important top. At least we know this is going to be an important top, and this is going to be an important bottom. So we're looking for some sort of a penetration on one of that side. And again, here 1, 2, 3. So this was an important low which we considered. Then once it started to fall below this, we know that this is going to be an important top. So right now we will look at this as an important top because this is a high which is more than its previous 3 days high. So right now we are looking at this particular high, which is 17,377, as the important high for the time being, which is approximately 17,400 or so. So the resistances are generally will be the 16,825, which is an important thing. Then probably 16,888. Then of course this particular low, which is 17,003. So these are the important points that we need to look at it. So these are the lows and resistance areas which will now where the market, if it heads towards that, can get resisted and for a push back to a lower level. So right now we are looking at a next important bottom which could come closer to 16,200 levels. 16,200 is where probably we can look at some sort of a respite for the market, or it will be 15,950. So this is a 3 month, 3 weeks. So 3 months in Nifty is down, 3 weeks in Nifty is down, 3-day position is also down. So overall it is down. So now we will look at a shorter time frame. Now 30 minutes, which we illustrated last week, 2 days back. See, we said that if there is a gap, wait for a corrective bar, okay, and go along with the gap. Now, yesterday there was a gap up. So probably we could have expected that yes, there is a chance that it can go up. But despite knowing that overall situation is still bad, but there is sometimes there can be some good correction in the market. So here, this is a gap up. Okay, so let's wait for a corrective pullback to happen. And if you see the corrective pullback has come here, the corrective pullback has come here. Okay, but the corrective pullback when it came here, it has already broken last 30 minutes low. Last 30 minutes low. So that means it gave a feeling that no, this probably could be a top. This probably could be a top, right? Because we had said very clearly that if there is a 30 minutes time frame of 30 minutes being broken, then in that case you can identify this as a top. Okay, so this is a top as far as 30 minutes is concerned, and this is the bottom as far as 30 minutes is concerned once this was broken. Okay, but overall we know that the trend is generally on the downward side. So that is because here it is broken on all those things have happened already. So we know that this overall time frame is down. So in that particular case, what we have to do is that we need to look towards actual short position here. But despite that, since there was a gap up, okay, we said that no, if there is a corrective bar and if there's a corrective bar high is taken, you can go long with a stop and reverse. So yesterday you might have gone long here, 16,882. Stop loss is 16,826. Okay, so this is approximately 56 points. Now it didn't go much higher. Then after that it started to crash below this. So 56 points stop loss happened. But after that you would have gone short. And rest is history. 16,826 fell down to 16,669, giving 160 points. Minus 55 points. So 100 plus points was there retained as a profit on that day. Now today it was a gap down. Today is a gap down. So what you are waiting is you are looking at some sort of a corrective bar. And let's say this corrective bar happened somewhere here. Okay, this corrective bar happened here. Okay, then it should break below this. So the next bar, let us say even if it is an inside bar, that was broken. So that means probably we thought no, this could be a top. This could be a top. Okay, now generally speaking, what we should really do is that overall we are in a downward trend. So any 30 minutes low, if it is being broken, we should be looking towards that particular short. Now here if you see it has been a generally on the downward trend and there is no new top being made. So now let us say even if you have gone short here and let us say you would have removed your stop loss here, you would have put, say, let us say this was a short below 16,373 and you removed at 16,430, again a 55 points stop. And that 55 point stop probably you would have today you would have gone long about 430 and today it's 438, it closed at 438. So even on intraday you might have made a 55 points loss today. Yesterday you might have made 105 points profit. Now on a position trading, okay, it is that you would have removed your short position here today. You would have removed a short position here, and you would not have gone fresh short today because you want another 30 minutes low, 30 minutes low point to be broken, which will come only here. So once if it breaks below 16,376, if it breaks below 16,376, then in that case it becomes definitely a short, keeping this high as a stop loss, 16,484 as a stop loss. 16,484 as a stop loss. So be prepared in case if it starts falling below this, then in that case you should look towards selling below 16,375 with a stop loss at 16,484. 16,484. So this is a new strategy. Now if you go for a short, go short because all the other time frames are in a lower or in a downward trend, monthly, weekly, daily. So intraday time frame also you get a short, then you have to go short. So your trading strategy must be like this: bigger time frame, medium time frame, shorter time frame, intraday time frame. First all the three are in a downward trend. So the fourth one also, when it comes in the downward trend, then just go for the downward trend. So here we should be in a position to look towards going short. Okay, below this. Same thing happens with Bank Nifty also. If you see, okay, now this is Reliance. So I think Bank Nifty is getting stuck. Okay, now Bank Nifty again. Let's say there was no there was this is an important low right now, and if it starts to break today's low again, okay, or if it starts to break even this low, this particular low, then in that case you should be going short, keeping this high as a stop loss. So Bank Nifty will be a short again below this low of 34,449, keeping 34,797 as a stop loss. Why? Because this will break last 3 minutes 30 minutes time frame, last 3 bars of 30 minutes. When it breaks last 3 bars of 30 minutes, since the overall trend is down by in all standards, we should go short, keeping this particular high itself as a stop loss. That's also very simple methodology to trade. First identify the bigger time frame, monthly, weekly, daily, keep it. That's all. You're not going to trade on that, but you're going to just identify that. Then after that, you're going to come to a time frame which is comfortable for you, okay? Because you want a stop losses which is lower, which is very clearly, because see, the major thing that we should always know is that we should allow the profit to run and cut the losses, okay? So in this particular case, let us say if at all there is a loss, it will be 34,449 to 797, approximately at 300 points, okay? But when you get a profit in Bank Nifty, you will get 1,000 and 2,000 points, because if you see all that happened here, see this is the say here it got cut, let us say, okay, so this place 36,108. Ever since 36,108 you are short, which means now we are 34,680, 1,300 points. So 1,300 points, no, it's a profit that you can easily get in Bank Nifty if you are on the trend, if you are along with the trend. So be along with the trend, and just play this game as per the books, okay? Just be consistent. The amount of winning trades, always know when you're doing a trend following, when you're doing this type of trades, generally the winning ratio can be even 50% or 60%. That is, if you do 10 trades, maybe you may win only 5 trades, okay? But since you are allowing the profits to run considerably and losses being less, the average profit in those trades that you win will be definitely higher than the average losses of the other number of trades, resulting in a huge profit. So that is what your end game should be. That is, not bother too much about the number of winning trades, number of lost trades. That can be even lower as far as the winning trades is concerned. But the average profit that you make in the winning trade should be higher, should be considerably higher than the average loss that you make. Okay, so that will result in a good profit, and for the investment that you are putting, it will give you a huge return. So you have to be very consistent. The methodology that you are going to adopt, whether you are going to trade on your own or whether you are going to use algo for trading, but you need to be very clear that you have to implement that particular system which will give you the profit like that. Okay, so we will move to probably individual stocks, and we have already talked about last week we said this Bajaj Finance. We said a major downward trend. You remember we said very clearly that Bajaj Finance on this particular day, we said no, any rally should be sold. This is what we said, right? On this day, when it started to fall, we said very clearly, no, it should be sold very heavily. And the remaining days also, it has started to fall without any respite. Okay, so there seems to be something cooking here. Let's see the bigger time frame here also. Normally in stocks, you will have a lot of choppiness in a shorter time frame. So let's look at this. Again, this is getting stuck. Okay, at least we are happy to get Reliance. So okay, so Reliance, we'll look at the monthly chart. See, Reliance had some frequent monthly failures also. If you look at it, so that's a good indication to come. So let us say this was the cut. This once it was cut at 1991, after it had rallied up to about 2,300, 1991, then you need to be careful because you don't know what will happen. Then after that, again this 3 months high was cut somewhere here, okay, which was 2120. So you might have got out at 1991, but now you have gone on board again at 2120. Now This is a small spike, so I would keep this particular low as the important place. So this is the 1, 2 and 3, say, right? So this is the place, okay, and this was a temporarily small this one, so we need to make a filter for this. So let's say this is a particular low, that is 2247. So this 2245, 2247 is holding, okay, which means that no, whatever that we went long somewhere here, okay, whatever long that we went, okay, and this is a very important, this one 2120, and we should continue to hold till such time we see a crash below 2243. So till that time the long term trend is up as far as Reliance is concerned. What will happen to the weekly chart? Now weekly chart, okay, again say 3 weeks low, okay, so this is again a spike. We will address all those things, but now let us say this is a 3 week low, so that means this low should not be cut in generally speaking. So for a time being we should keep 2538 as a very important place where it should not go lower than that. Then again there will be some sort of a reversal that can happen as far as the medium term chart is concerned. So right now the bigger time frame and the weekly time frame both are on the upside. But daily time frame, let's look at the daily time frame. Daily time frame is not good, which means this is now a very important high and this is an important bottom. So we need to know which one is going to be cut for us. And we said no, this is also a very important weekly bottom also. So if this is cut, then the major medium term changes. But right now we should have put a trailing stop loss here. So the trailing stop loss for us should have come at 2758, because if we put a 2758, after that if it starts to move a little higher, then we can again go long. Otherwise now you see here also, if you have put a trailing stop loss somewhere here, you could have put a trailing stop loss here, okay, then we would have gone long here. You could have gone long here, okay, keeping this low as a stop loss. So right now the trailing stop loss should have been put below a 3 days low. So clearly when you do a trade like this, what you should do is trailing stop loss. If you are doing on a bigger time frame, then 3 day low should be a stop loss. 3 day low should be a stop loss, okay. And the easier way is that again you re-enter the position when a 3 day high is cut. So just follow this consistently, you will be a winner. Now let us look this at the shorter time frame. Probably we look at the 30 minutes or weekly or hourly chart. Stocks need to be a little bit careful about the smaller time frames because of its ability to because of the choppiness in the market. So here in a 30 minutes time frame, if you see this was a low, this was an important low. Then after that, when it started to fall, then in that case any 30 minutes low, if it is cut, we should be going short. So here let us say even an intraday, when this happened, when this low is cut, we should have gone short. Okay. So similarly, other positions, we can only put a trailing stop loss. We cannot go long. Now after this, let us say this particular high that was made, any 30 minutes low cut. So this low was cut. So when this low was cut, we should go short 2680, keeping 2730 as a stop loss. So now the new thing is that it should cut this particular thing, that is 2601. If 2601 is cut, then keep 2639 as a stop loss and go short. So clearly very easy, no other the complications and other things. So straight away we are looking at a very easy way of trading. So identify the trend, okay, then put in a stop loss which is last 30 minutes, last 30 minutes bar. If that high is cut, if the highest high of the last 30 minutes bar is cut, then put in a trailing stop loss. Then wait for the new short position to emerge, because the overall trend, if your gauged is on the downside. So how do you look at the overall trend? So the overall trend We know that if the monthly chart we have seen, weekly chart we have seen, and daily chart we have seen. In the case of a 30-minute chart, when you're trading, you look at the daily chart, don't look at the monthly and weekly. So one time frame higher, you look at it. So daily chart, it is on the downside because it is also cut at the last 3 days low. So till that time it cuts the last 3 days high, then you should be in a position to look towards only short position. So last couple of days you should be looking only at the short position in the market, and you would have got this trade again. Okay. So now we will look at the probably will go to commodities, right? So let us look at international gold. So this is the 30 minutes international gold price, and we will look at the bigger time frame. First of all, we look at the monthly time frame. Okay, so monthly time frame, this is the gold 1, 2 and 3. So right now gold in a monthly time frame is still high till this month low is cut. So this month is going to be a very, very important thing as far as gold is concerned, for the direction to be maintained, because we are now at the third 2 months low is already over. This is the third month. So this third month low, whatever has happened in May, of course there are many days still to go. So right now, till now the low is 1850. Till now the low is 1850. So let us see what happens at the end of this month. After this month, if the low is cut, then we are bearish. So right now we are bullish because it is trading above a 3 months high. Okay, so the bigger trend time frame is on the upside. Now let's look at the weekly time frame. Okay, so on the in the weekly time frame, we are on the downside. So see, 1, 2, 3. This low has been cut, right? So right now on the weekly time frame, we are on a downward trend. So let's look at the daily time frame. So these are all to know the trend. Okay, so the daily time frame, this is a 1, 2, 3 days high has been cut, right? So this, since 3 days high has been cut, this is a important bottom. So we will keep this as an important bottom. So you can either go long keeping 1850 as a stop loss. You can go long keeping 1850 as a stop loss. The next important high that normally comes is this particular high, because this is also cut the last 3 days high. But normally we don't take inside days. But anyway, if we take that also, so this 1919 is an important high. Now, we have also said clearly that no, you can look at the higher bottoms to emerge. So this is a bottom, and tomorrow, let us say this is today's range that is going on. If tomorrow this high is cut, that is 1890 is cut, then in that case we are on the long side, giving 1866 as a stop loss. So 1890, above 1890, we will be on the long side of the market, giving 1866 as a stop loss. Why? Because this is a 3-day high has been cut. 1, 2, 3-day high has been cut. This is a bottom. This is a higher bottom. Okay, so 2 higher bottoms, and this is likely to if it moves higher, we can be on the long side. Second thing that this is since this 3-day high has been formed, this is an important bottom. So as long as this bottom is not cut, okay, we are on the long side. So what should happen to make this as a top? Okay, then 1, 2, 3. So this low today, we should have the last 3 days low to be cut. So today this low has to be cut. Tomorrow if it happens, then it will have 1, 2, 3. So this low has to go off. So we will monitor for any 3-day low cut. If any 3-day low is cut, then we will go short, keeping this high as a stop loss. Keeping this high as a stop loss. Very simple. Okay, so right now we are looking at monthly gold as is a mixed signal, where we have the 3 month, it is on the monthly frame, it is still in an uptrend. In a weekly, it is downward trend, and in a daily, it is on an upward trend, or likely to emerge into an uptrend. Okay, with 18, all this makes 1850 as a bottom right now. 1850 as a bottom. Okay, but at the same time we have seen this particular high, that is weekly high. This is an important high we have seen. So we can draw a Fibonacci to know to what extent probably it can go up. So 1906, it went up to 1906. Probably it can edge up to 1940 to 1965 also. So chances that gold can move from 1890 if it cuts. It has a chance to go up to 1940 also. 1940. There we have to see how it's going to behave. So right now we are in a downward trend with a possibility of gold going up to 1940. So on the 3 months time frame, on a monthly chart, it is on a downward, it is an upward. Weekly it is downward. Daily it is in a upward. So it's quite a mixed signal. So for those who want to take it, positions can be taken, because on a weekly it is on a downward time frame. So if you are trading on a daily chart, then you should look at one level higher, which is a weekly chart. Since it's a weekly chart, what you should do is that probably you should be preparing to go get yourself into a short position. By now, short position should have been removed, but you should be looking for a re-entry in the short position. So at this place, the re-entry in the short position as on today comes only at 1850. Let us see what happens in coming days. So we look at Brent crude now. There was a Brent crude oil crash. So on a weekly chart, say 1, 2, 3. So this is an important low. Okay. Now this is also an important low. You can see all the 3 weeks low holding. So now after this low will become important. So so this is going to be an important low right now, which is 99.20. As far as Brent crude is concerned, 99.20 is going to be a very important low. Now monthly chart, definitely it may be on the upside. So let's look at the daily chart. Okay. So the daily chart, once it started to move above this okay, so once it started to move above this particular high, the 3-day high, then this became a very important bottom. This became an important bottom. So you could have gone long, keeping this bottom as a stop loss. Now it is now on the up move. So what the long position that should have been entered at 105.85, now it's running. Now the stop loss is now at this place, which is 105.04. So our stop loss is around 105. The entry is 105.85, and it is on the upside road. So if you have done 2 contracts, one contract you could have taken profit, next contract you can wait. So when we looked at the weekly chart, we know that this is an uptrend. Okay, so when you're doing it on a daily time frame, since the weekly trend time frame was on the upside, on the daily time frame you could have gone long. Now when the daily time frame is on the upside, then you when you're looking at the hourly chart, normally the commodity is a lot of whipsaws. So on in this one there, you should only be looking towards going on the long side. So we should be only looking towards on the long side. So yesterday it fell to this place, right? So there is 108.67. Then after that, when it cut a 3-hour high, say when it cuts a 3-hour high, 1, 2, 3. Okay, so this 3-hour high, when it is cut, we can go long, keeping this low as a stop loss. Keeping this low as a stop loss. Why? That is basically because the overall trend is on the upside. Okay, so this is a cut which is 110.66, keeping 108.67 as a stop loss. So after that, when we see if you want, you can put a last 3 hours high as a stop loss. But these things happen, like see what happens, you would have put this low as a stop loss, then you can see it is going down. So what we should do is that we should, if at all there is a breach of this particular level, we should wait for a second cut of that. So when a second cut of that happens, then we can look towards going short. So right now in a hourly time frame, we could have removed this position somewhere here. This is the last 3 hours high. So we could have removed the position closer to 111.85. So if you are doing an intraday trade, normally no, you should be looking towards going long above this particular place. Then in that case you should put a stop loss somewhere here. Okay. So this is generally the way that you can look towards going long and short, because the higher time frame is on the upside, daily time frame is on the upside. So then you can look at a smaller time frame, which could be hourly chart or 4-hour chart, because commodities being it is better to look at the 4-hour chart. Hourly chart could be very because there are a lot of hours where proper trading would not have taken place. Okay, but there will be price action, so we may have a sort of a problem here. So here in a 4-hour chart also, if you see after this particular fall, right now we are on the upside. Okay, so we should keep this low, which is the 108.67 as a stop loss, and we are on the upside. Now this after this 4 hours is over, this becomes a stop loss. This is 110.66, because that will be a last 3 bars of 4 minutes being 4 hours being cut. Then we can look towards removing that, because then in that particular case this will become a top. So right now, since this 3 hours bar was cut, this has become a sort of a top. This has become a top, and this has become a bottom. So right now we have a situation where either one of this has to be cut. That is on a bigger time frame, on a 4-hour chart, we need either 113.38 should be cut or 108.65 to be cut for it to really push it down on the downside. So this is a clear range that now we can see. So it is up to us now to decide about how to look towards trading here. And very simple way you should use for trading. Basically, for a big time frame for an investor, you should identify a 3-month. Then if you are doing positional trading using day charts, just look at the weekly chart, then come back to the daily chart and trade. If you are looking at an intraday, then better look at the daily time frame and then switch over to the 30 minutes or 1-hour chart or 4 hours chart. I think in Nifty and Bank Nifty you can use 30 minutes chart because it will be very difficult for you to use a slightly higher time frame because profits will evaporate. In the case of commodities, because it's a continuous market, so you can use 4 hours chart. Generally, they use for currencies and commodities, they normally rely on a 4 hours chart and use it. So we have illustrated this. Maybe 1 hour we have seen commodities, we have seen some stocks, probably one or two stocks we can look at it. Probably let's look at ICICI. So let's look at the bigger time frame, monthly chart. So monthly chart clearly down. So once this low has been broken, so this is a very clear downward trend, and so we don't need to look at anything else. This has been cut, so we are on a downward trend. Let's look at the weekly chart. So the bigger time frame is on a downward chart. Weekly time frame, yes, this is gone. This is gone. So with this gone, I think we know that very clearly that this is a stop. This is a very important top. 777 is a very important top, and 7 with a break of 732. So it's a short. Okay, it's a short right now. So any rally, probably you can put in a Fibonacci and sell. You can put in a Fibonacci and sell. And now then we look at the daily chart. Okay, daily chart again down clearly because you have a 3. If you look at it, this was some sort of an important bottom, 744, because after this bottom was made, 1, 2, 3. So this third high was cut. So because this was cut, we are keeping this as a bottom. This is a bottom, and this is a top for us. Okay, so this is cut, and we are short. Okay, so we are now in a daily time frame. We are now short at 744. We are short at 744 on a daily time frame. So because of this being we are short in a daily time frame, you can look at 30 minutes or 1 hour. Okay, so let's look at the 30 minutes. for normal trading. Okay, so because we told you we were short at 744, then again this gave another position for us at 738. If you had missed earlier to sell, it would have given us 738 place as a place for stop. And probably we might have put this I as a trading I as a place where we would have got into a profit. That is, we would have taken a profit, and we will be running the position, new position now, neutral. We will be having a neutral position, and we should be looking, because the last 1, 2, 3 I has been made, so we should be looking this low as an important low, that is 715. So if you have taken a profit at around this I of 717 or so, look for a short entry below 715 right now. So let's see what happens on Monday. So this is how you can use just as 3 minutes, 3 hours, then 30 minutes, all those charts for trading. So if you have any questions now, please ask. Thank you. So thanks for your participation. Happy weekend. Thank you.